Hey folks, welcome to Quantsapp. Welcome back to yet another video. In this video, we will learn about a process which is essential for us if we are trading in options. So this video will focus more on strategy building. How can we go ahead and choose the right option trading strategy for our forecast? But most important of all, why we need a right option trading strategy for our forecast. So I'm pretty sure all of you watching this video, you might be knowing how to forecast the market, where the market will move. Everybody will have some sort of indicator, some sort of analytics. Some may use derivative analysis or some may use technical analysis, right? Everybody will have a different sets of indicator which will tell them basically the market will go up or market will go down. Now what this video focuses on is how can we choose the right option trading strategy for my forecast. My forecast can be anything. My forecast can be that the market might go bullish. My forecast can be that the market might go bearish. Now, first of all, let me explain you why we need a right option trading strategy for our forecast. So if you see market right now is at 19,835. Nifty future is at 19,835. Now, let's say till Tuesday, my forecast is that the market might go to 20,000. Okay, that is my forecast. That I'm expecting some sorts of bullishness to happen in Nifty. What is my target? My target is 20,000. Now, there could be two cases over here. Case number one is that the market didn't go to 20,000.
Hey traders, Quantsapp has simplified option trading analytics for you. Click the link in the description box below, complete your sign up process and access the most advanced option analytical tools in the entire industry. Thank you.
So I'm not wrong in that case. Okay. So that is not my fault. Okay. Because I couldn't say that I am forecasting market to go at 20,000, then the market should go at 20,000, right? That will never happen. So first scenario is that you can't do a lot in that case, right? Scenario number two is that the market went to 20,000, but the strategy that I picked up, that didn't give me enough returns. Okay. First scenario is the market didn't go to 20,000. So you will book the loss. You can't help it. But if the market goes at 20,000, your strategy should be such that, you make the most profit if the market goes at 20,000. So over here, what we are trying to do is we are trying to optimize the reward to risk. Okay. We are trying to create a best strategy for our forecast. So let's understand how can we go ahead and achieve that. So first of all, just go to architect. Okay, so I'm going to options, architect, analytic over here. Select the instrument in which we are looking out to create a trade in. So I'm selecting Nifty and today's expiry is concluded, 23rd November expiry, long call. Okay. So first of all, the first strategy I generally prefer is long call. Okay. So what is my view? My view is that till Tuesday, okay, which would be 4 days from here, Monday or 5 days from here. Okay. My expectation is that the market will go to 20,000 odd levels. Okay. So 20,000 pay, how much profit I'm making? I'm making roughly 4,800 rupees of profit in this option trading strategy. Okay. By Tuesday. Now let's say what will happen if I hold a strategy till expiry. So still I'm getting 4,700. So if my target is 20,000, then this strategy makes sense. It is giving me enough returns. Now, what is the type of loss I'm booking? So I am booking a loss of how much? So let's say I am setting a stop loss at 19,600, okay, which is 200 points down from here. So I'm making a loss of 5,176. Now, understand one thing, what's happening? Market going 200 points positive. I'm making 4,800. Market going 200 points negative. That means if I lose 200 points, if Nifty slips 200 points, then I'm losing 5,200 roughly. So over here, am I actually winning mathematically? No, I'm not winning. Why I'm not winning? Because I am giving market 1 rupee and I'm earning 1 rupee. So in the long run, this process may not be very sustainable. Why? Because my reward to risk is not getting amplified, right? That I am earning 4,800 roughly and I'm losing 5,200. So even if my technical analysis or if my forecasting path is not strong enough, then this entire thing will not make sense to me in the long run. So now what I want this reward to risk to be relatively better. Now, if I just scroll down a bit, okay, so we will get to see today. That means depending on how much number of days ahead you want to analyze the payoff. So right now it is showing us the payoff of 5 days ahead from here. Okay. So similarly, this reward to risk is trying to show us that if you hold this strategy for 5 days ahead from here, so today is nothing but T plus N. Depending on how much number of days you have moved ahead, according to that, it is trying to show you the probable payoff. Now it is trying to tell us that if market goes to so just you see that if market goes within 200 plus and 200 minus points, then you are basically not having an edge of reward to risk. What is the type of reward to risk you are making? 1.1. That means you are not making an alpha. So now what should I do? One thing that I generally prefer is I try to convert the strategy into a bull call spread. Okay. So let's say I'm selling this strike price call option. Now this strategy has been converted into a bull call spread. Now my profits are getting capped, right? And let's see if this strategy. So one thing, whenever you are actually, doing modification, one thing you should remember is that the reward to risk and everything, they should improve if you do any adjustments or if you do any modifications. Okay. Matlab, whatever reward to risk and whatever, ROI you were getting earlier, the next strategy that you create, the modifications that you do, that should improve that. Elsewhere, that will not make any sense. Okay? Don't do any unnecessary, adjustments, or don't try to make your strategy look a bit complex. Okay? So now if you see, the reward to risk is again maintained at 1.017. So again, I'm not getting a good alpha over here. Now the problem with options is, and also the best part about options is, matlab, you can call it a problem or you can take it as a solution as well. But if you see that there are so many strike prices to choose from, okay. So if I am bullish on market, I can buy this call option, I can buy this call option, I can buy this call option, right? But do I know which call option should I buy? Maybe not. Why? Because for every strategy, okay, or for every forecast, there are over millions of combinations and permutations. Okay. So manually choose one out of these millions and combinations and permutations of option strategy is an impossible task. I will never be able to do it. Okay. Now, another thing is I can buy this. Okay. And then I can sell this. Okay. So that will create a bull call spread. Now I can also buy this and I can also sell this. Okay, this could be another strategy. So this way there would be over millions of combinations and permutations. So I manually can't go ahead and decide which strategy will be the best. So for that, we have a very intelligent algorithm in the application, which is named as optimizer. So to reach optimizer, you can navigate it through it from the link in the description box below. The link would be also there in the iCard. Just search for optimizer and click for find strategy. Okay. So the selected instrument will be fetched automatically. If you want to change the instrument, you can do that. So CMP would be fetched, futures would be fetched, direction. So what is your forecast? So I'm saying that the market is bullish. We will understand how can we identify the trend or how do I identify the trend. But that is not the crux of today's video. The crux of today's video is to understand why I should pick up the right option trading strategy. Now, let's say my forecast is that till November 21, the market might go to 20,000 and I'm setting a stop loss at 19,600. Okay, or roughly 200 points positive is my target and on the negative side. So let's keep it equidistant only, no? 635. 30,000. Okay. So now almost 200 points on the up and down side is my target and stop loss. Optional parameters. So the algorithm will ask us what is the type of capital we are ready to deploy in this trade. So I'm saying that I have a capital of 5 lakh rupees to deploy in this single trade. The risk. So it will ask us if your stop loss is triggered on the target date. Okay. what is the type of amount you are ready to lose. So I'm saying that I'm ready to lose 5,000 rupees. Minimum strike, maximum strike, it has nothing to do with the range of Nifty, but instead what it is trying to tell us, it is trying to tell us that whatever permutation and combinations that will be done by the algorithm, the optimizer, those strike selection will be done only from these range of strike prices, 19,400 silicon, 19,900. Okay. All strategies, so the strategies such as ratio spreads, naked selling of put option, naked selling of call option. So even those would be involved in limited risk. Only the strategies which have defined losses, only those will be shown to us. Just hit apply. We will get few of the option trading strategies. Okay. So now if you just see this bull call ladder, okay. If you see this long call, if you just see this bull call spread, so all these strategies have been shown to us by the application. So let's keep it simple. Just check this out. Long call. Okay. So what it is trying to tell us, even a long call, but we weren't able to select the right strike price. Now, if you see, it has selected the right strike price. So it's trying to tell us that 19,900 call option, one lot will solve the purpose. So what is the trade? This is the trade I need to initiate if the forecast of mine is that I need to go ahead and if my target is 2035 and my stop loss is 19,635. Okay. Now, if you just see that if the market goes to 20,000 odd levels, okay, so you will roughly make 2,700. But what is your loss? So your loss is also 2,700. But if the market goes to, let's say, 2035, so you're making 4,300, right? Wherein you can see that if market goes at 2035, you will make 4,200. And if market stops you out, okay, if you are getting stopped out, you are just losing 3,000 rupees roughly. So that gives you a good reward to risk of 1.4. So which is relatively better. Now, depending on the market condition and depending on the forecast that we have, the strategies will keep on changing. So let's try that. Okay. So now let's, keep the, just move the day, let's say this one. Okay. So I changed nothing. Just one thing I did is I just moved the day slider ahead. Okay. Okay. So even by doing a very small thing, we can actually see that a lot of things are changing in the strategy. So this way we can select the right option trading strategy for our forecast using the optimizer. We can select any instrument. We can select any F&O stock over here. If you have any forecast on any stock as well, we can give inputs and the optimizer will show us few of the option trading strategies, which will be based on mathematics. Now see, why we did all of these things? Because if I'm wrong on forecast, that's okay. But if I'm wrong on strategy, you can decide, right? Which strike price should you select, what strategies that you can select, right? So that is something which is in your control. So you can keep most of the cards in your favor, right? So that way we can select the best option trading strategy from the optimizer analytic. Now coming to how can I go ahead and forecast? So there will be a lot of videos on our channel and also you might be knowing it. But one of the things that I do is I simply come to cycle. Okay. And then I let the data tell me which are the stocks where there is a clean cycle which is getting established. So look back period 20 will make sure that in last 20 days, I'm looking out for long unwinding stocks. Okay. And indices, obviously, for at least 14 days. So by applying this check, I am saying that in last 20 days, show me all those stocks which were on the bullish cycle, which is long unwinding cycle at least for 14 days. And here we will have the stocks. And from this, I will pick up some of the instruments. So one script I analyzed is NTPC. Now, if you see, even if you have checked NTPC on this day or this day or this day, even yesterday, still you would have got decent move on NTPC. Why? Because there is a textbook long unwinding pattern getting followed in NTPC. So the idea is that if the stock falls on the long unwinding side, that stock will be, I will have a bullish bias on that particular instrument. Further, more analytics can be clubbed, more analysis can be done, right? So this is just a basic approach to how can we go ahead and create the trades in options. Now, what we did, we first created strategies manually. If not, then we can use something like optimizer. We will obviously always see that is my reward to risk getting improved, or is it getting degraded? Only if it is getting improved, only then I will be interested in that option trading strategy. Apart from that, that was it from this video. Thank you so much for staying tuned along with me up till here. Do check out Quantsapp from the link in the description box below. Happy trading.